Gross profit margin is an important analysis for your exam. You often see this question. So today here I'll show you how to calculate gross profit margin. So for your better understanding, we have taken a question from 2023 IGCSE accounting past paper. So before we do this one here, let us have a look at the question. Adia is a trader. She buys and sells one type of goods only. She has provided the following information. So we see here for the year to 31st October 2023, we have here revenue, purchases, expenses, other incomes. At 31st October 2022, we have also inventory, trade receivables, trade payables, and bank overdraft. At the end of the question, we have the inventory quantity and valuation at 31st October 2022 are double those at 31st October 2021. Okay, so we have here something to do about inventory. Okay, good. So what is the formula to calculate gross profit margin? So it is simple. We know gross profit margin equal to gross profit divided by sales revenue times 100. Okay, so here on the question we have revenue but we do not have gross profit. We need to calculate our gross profit. Okay, so we know gross profit equal to sales revenue minus cost of sales. Yeah, so we have sales revenue but we don't have cost of sales. So we have to calculate our cost of sales. Okay, so how to calculate cost of sales? We know cost of sales equal to opening inventory plus purchase minus closing inventory. Okay, so we have some more items. If we have purchase returns, we need to subtract purchase returns. If we have goods for own use, that means drawings, we need to also subtract. If we have carriage inwards, we need to add here. Okay, so as we don't have these items here on the question, so we did not write. Okay, so opening inventory here on the question not given clearly, we need to calculate. Okay, so here on the question, the inventory quantity and valuation at 31st October 2022 are double those of 31st October 2021. Okay, so 31st October 2022, we have closing inventory. It is $7,500. Okay, so it was double those at 31st October 2021. Yeah, so if we divide 7,500 by 2, we will be able to find our opening inventory. Yeah, so $7,500 the closing inventory. So opening inventory will be half of this. So here $3,750. Okay, so let us write here opening inventory $3,750, and here on the question we have purchases $62,305, and already we know closing inventory we have $7,500. Okay, so now we will add purchases. So here it is 62,305. Okay, now we will minus closing inventory. Okay, it is given on the question $7,500. Okay, so now if we add these two amounts and from the addition, if we subtract $7,500, we will get our cost of sales. Okay, and it is here $58,555. Okay, our cost of sales. Okay, so now we will be able to find our gross profit. Yeah, because we know sales revenue minus cost of sales equal to gross profit. Yeah, so here sales revenue was $98,000 on the question, so we will calculate our gross profit GP. So $98,000 minus cost of sales, here we have $58,555. Okay, so now if we minus, what do you get? We get here our gross profit $39,400 $45. Okay, this is our gross profit. So let us write here. We calculated gross profit 39,445. We have our sales revenue on the question. It is $98,000, and we will multiply this by 100. So now if we multiply this by 100, then we divide the answer by $98,000. We get here 40.25. What? $40.25? No, not at all. It is 40.25%. Okay. So this is the answer, gross profit margin. On my next tutorial, I'll show you how to calculate profit margin.